Hey everyone, welcome to our webinar. I hope everyone is doing great. This is Stan Heller, consultant for VectorVest Canada. And if the sound is good, please let me know. Give me a Y or a yes in the chat box, and maybe let me know where you're tuning in from. That would be great. Sherilyn says 5 by 5, and Mark says yes. Sherilyn, this is definitely for the US. It's for Australia, UK, Europe, Canada, all of our VectorVest countries. Absolutely. So it's great to have you with us. Gord, yes. And Elmer says sound is good in North Dakota. And just checking the YouTube. Looks like it's going well over there. I hope you can hear me okay. Ali says yes, so that's great. And I always appreciate that. Thank you very much. All right. And Kahil from Canada, USA. Mohammed. Mary says yes, and Greg from California. So we've got a great turnout, and really appreciate you all being here. Thank you so much. So our webinar today is titled Mastering Moving Averages. And certainly want to welcome you again for those of you just coming into the room. This is Stan Heller, and I'm the consultant for VectorVest Canada. I'm broadcasting from my home office in Lethbridge, Alberta, just about an hour and a half to the east, I guess, of the Rocky Mountains, and an hour from the Montana border. David, good to have you with us here from Florida again. Thank you. Yeah, Gord says, how are things in Alberta? Well, Gord, everything's going pretty well, but our COVID case numbers are not where they should be, and particularly in my community of Lethbridge, which is about 2.5 hours south of Calgary. Okay, so I'm just getting some feedback here. Just got to make a little change here. Sorry about that. There we go. Just got to change, getting a little feedback on the sound, so I'll just change that up here for the YouTube folks. And there we go. Okay, I think there we go. And Barton, good evening from the UK, and Rini from Brooklyn in New York. That's awesome. And Johan, hi there from Brisbane, Australia. Gosh, I wonder what time it is there. I think it's either early morning or, but we're glad to have you with us, Johan, that's for sure. All right, and Rajesh, thank you for joining us again. Shiva says can't hear. Oh, Sherilyn says stop bragging. Oh gosh, I wasn't bragging. We could be doing better. Oh gosh. Listen, if you're missing out on sound, yeah, Alan says 9 a.m. in Melbourne, so it's early Friday morning. So happy Easter and Good Friday, Alan, and all our friends from Australia. That's awesome. Johnny from Montreal, or no, sorry, David from Montreal. Great to have you with us. If you lose sound or audio, I think most of you know this is your chat box. This is how you open your chat box. But if you lose sound or video, I should say, then you do need to log out and log back in. Okay, you won't hear me if I tell you, so I got to just show you there, Shiva. So just log back in. Oh, Sherilyn says, quit bragging about the Rockies and the terrain around you. Oh gosh, we love it. Our Waterton Park is so beautiful this time of year, and it's pretty nice. Sorry about that. Got to brag about that a little bit. All right. So what I was going to say here before we got going too far is, well, again, I'm really delighted to have you with us. The webinar is about mastering moving averages, and in particular, I'm going to show you an excellent graph layout and trading strategy, a rules-based trading strategy that has become a favorite for many of our VectorVest subscribers, traders, particularly swing traders, love this charting and the rules for the strategy. It's called the EMA squeeze, and you may have seen it before when I introduced it at last October's Financial Freedom Summit for VectorVest, or Jerry D'Ambrosio's special presentation video that he did in November, which is still available, and he's done another one for the weekend here as well, just to show some recent examples and that sort of thing. So if you haven't seen it before, I'm sure it's one that you will want to add to your trading toolkit. If you have seen it, you're going to learn some nuances again today that are going to just help you implement it maybe a little more confidently. And the EMA squeeze is one of several setups and trading strategies that Jerry and I taught in a new Mastering Moving Averages course last November. And the course was just so well received that we're relaunching it right now at a very special price. And I'm going to tell you a lot more about that maybe in the last 10 minutes or so of our presentation, so you can look forward to that. So let's get back to where we were and get started. So just before we begin, I just wanted to do a really quick poll, and on a scale of 1 to 5, with 5 being the most important in terms of how often you use moving averages, but how many of you already use moving averages as a key indicator in your analysis for trading? So that would be a 5 if you use them all the time. It'd be a 1 if you rarely use them or never use them, and somewhere in between if sometimes you use them, but maybe not always. So I'm seeing lots of, well, a few 5s coming in, 3 for Rajesh, 4 looks like, or 3 for Greg, 4 or 5 for Mary, Jeff. Yep, so we got a lot of 5s, but a 3 to 4 for Mark, and we've got a 2 for Bahari, and 0 for Sherilyn. So you're really going to enjoy today's presentation, Sherilyn, and some others are in that area as well, with a 1 and a 2, and so we really appreciate that. If I look over on the YouTube, I see a 4, a 3, a 5, an 8. Oh, 8 o'clock in the morning by Johan in Brisbane. I thought it was on a 1 to 5 scale, so the 8 threw me off there, sorry. And Johan says it's a 1 for him. Well, I can tell you, the moving averages, they seem so basic and simple that we almost kind of forget them, but really they are one of the oldest technical tools available, and they're really widely used by pro traders everywhere, and the institutions even more importantly. And so the more we can learn about them and have an understanding, we may use different moving averages for different situations or different portfolios that we run, but really important to know, to understand them and how they're used and when they're used. So we'll cover that a little bit today. Yeah, sorry, it's just a question here. Let me see if that, yep, that's the question. It wasn't really a poll. Not sure, I don't know how to do polls on YouTube, so kept it fairly simple here. Thanks, Robert. All right, so let's move on. So why are moving averages so important? Well, again, they are the favorite charting tool for many technical analysts, traders, and investors, and really it's for good reason. And they provide a means of smoothing price action. There's often a lot of noise where prices may be going in a certain direction, a certain trend, but there's lots of ups and downs in between. And the moving averages really smooth that out, and they make the trend and momentum far more discernible. And what I would just share with you is that the steeper the slope, in other words, if we have a slope of the moving average going up at about a 45-degree angle, that's a very strong trend. Any more than that, now we're getting into maybe a parabolic move on the trend. And while that's a good thing if you own the stock, you need to be aware that it's not going to go up that fast forever. And so you see that parabolic trend movement you want to start taking some profits near that top, or at least be ready. And not only are moving averages a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, and MACD. MACD stands for Moving Average Convergence and Divergence, and it uses the moving averages to get that convergence and divergence. And then stochastics is a favorite, I know, of Jerry D'Ambrosio, my co-presenter here for the Mastering Moving Average course. And so moving averages are just really important. Tim is joining us from Adelaide in Australia, and he's wanting to know if there's a unisearch that simplifies the search for the squeeze of the stocks and what are the parameters. And Tim, you've come to the right place, because later in the presentation I'm going to show you the search that I like to use, and basically it delivers stocks that meet the criteria or the rules for the EMA squeeze. So I'll show you that as we get going here. So here's a few things that we're going to cover during this webinar. And a key concept is moving averages. Well, remove the noise, and really they help us define the trend and predict if the stock will continue to move up or down. So this is a really important concept to grasp. So what we're going to cover, we're going to look at 5 key ways to use moving averages. I'm just going to give you the sort of the skeleton information for 4 of them. I'll go into a bit more detail with 1. And then, of course, in the Mastering Moving Averages course, we go into them all in significant detail. And then I'm going to get right into the EMA squeeze swing trading strategy that's so popular with our subscribers. And it's a complete system to pinpoint the high probability buy and sell signals. And we know from our webinars over the years that this system answers the 2 most important or common questions that traders are always asking, and that is, when should I get into the trade and when should I get out of the trade? So if you type in a 1 for if you have a problem knowing when to get into the trade, and type in a 2 if your biggest problem getting out of the trade, that'll help me kind of know where we go from here. So a 1 is your biggest challenge, knowing when to get in, what's the trade setup, where should I invest, or is your biggest problem getting out of the trade? That would be a 2. Looks like I'm seeing lots of 2s here in the go-to webinar. Scott says 1 and 2, and so does David. Yeah, but most people are saying it's getting out of the trade, knowing when to sell, and that's a big issue for a lot of folks. And just over on the YouTube, I see a 0. So, Jamini, you're doing well on buying and selling, which is great. And then Ali is having a problem knowing when to sell. So that's a big challenge for sure. And Robert is finding that trade setup is a problem. So there we go. Eleanor, 1 and 2. Well, that helps me a lot. I know where we're going now. All right, so a big question before we begin is when to use the simple moving average and when to use the exponential moving average. In VectorVest, we have both in our graph layouts and searches, and we also have the weighted moving average. Well, traders with a short-term perspective, for example, swing trading, they tend to prefer the exponential moving averages. So shorter-term moving averages tend to use the exponential moving averages because they give extra weight to the recent time period, whereas a simple moving average gives equal weight for every day of the look back period. It's just simply the price divided by the number of days. But with EMA, you'll notice from the graph below, I've got a moving average, a simple moving average of price of a 13 period, and that's the red, and the EMA of price for 13 period is green. And just notice how the green trend line or a moving average tends to follow price more quickly, tends to reverse course more quickly. And then as we move up in price again, right at the bottom here, the EMA starts to curl up a little bit faster than the simple moving average in red. That doesn't happen till right here. Okay. Yeah, Scott, a 20 period moving average or less would be kind of considered a shorter term moving average. We still do like the 20 simple moving average. In the course, we teach a strategy for using the 20 simple moving average, and it's actually become one of the really popular strategies among the hundreds of people that took the course back in November for sure. So here are the 5 key ways that you can use moving averages that pro traders, the institutional managers, this is how they use them. First of all, we can define and invest with the trend. Whether it's up or down, we see our moving averages showing us the trend. And actually the trend can be going sideways as well. And your moving average will show you that by kind of going flat line and across the page that way. And we determine how strong or weak the trend is just by the slope of the moving average. If we've got a nice 45-degree angle, that's a terrific slope and that's a good strong trend. However, if the slope is only about 10%, say, or 10% angle or 10-degree angle, then we know that that's not a very strong trend. And we use moving averages to identify, buy, and sell signals, and that can be with a single moving average, the 2 moving averages for a golden cross, or even the multiple moving averages such as we use in the EMA squeeze strategy. And it helps us identify when is the safest time to buy and when to consider selling. And we can set up rules around our moving averages based on that. The weighted moving average is like the EMA, Scott, but it does have a different calculation, but it does also give more weight to the recent days, but it's a different calculation than the EMA. Both have their place for sure. We can use moving averages to determine broad market conditions. Is there more buying pressure or selling pressure? Is the market healthy and in an uptrend, or is it in a downtrend? And again, how strong is that trend? So we can use it on the SPY, the TSX in Canada, the major indices in Australia, Europe, UK. I'll show you the setup that we like to use. And is the stock near support or resistance? And so a moving average helps you kind of find that support in an uptrend or when it's meeting resistance. And you'll often see a stock that moves up will often retrace back down, and it'll find support quite often at a moving average. In VectorVest, our default is the 40-day simple moving average. It's a terrific line, I guess, for support and resistance. If a stock is rising in price but approaching a 40-day moving average, it tends to kind of consolidate and possibly pull back before it finally breaks through. Institutions tend to use the 50-day moving average or even the 200-day, and in VectorVest we like to get ahead of the curve with the 40-day. And finally, is the price extended? And the moving averages help us determine if price is overextended and far away from its mean average. For example, if a stock is going up nicely and then all of a sudden it starts to rise almost parabolically, it can pull quite far away from the moving average, for example, the 40 or the 50. And when it does, that is more the riskier time to buy. We like to see the stock a little closer to that mean average, because once it pulls away, typically it's going to pull back and get a little closer to the mean average. And then the more aggressive traders will use the mean average in the other way, where price has fallen so far below a mean average, such as the 40-day or the 50-day, that the logical next move is to pull back a little closer to that moving average. So they'll take a short-term aggressive position just to take advantage of that short rally. The moving average will act as resistance, so they don't want to hold on too long. Mary, we use the simple moving average. It's a little longer or medium term moving average, and that's why we use it over the 40 EMA in VectorVest. Yep, great questions. I'm on my own today. Jerry is off today, so I hope you don't mind. I may leave some of the questions to the end, but I'll try to do my best to answer them as we go along here as well, as long as I don't run behind. So I'm going to go with that number one bullet that I had here, where we can use moving averages to define and invest with the trend. And this is an example of that. This is a setup that we teach in the Mastering Moving Averages course. We use a 13 EMA, a 20 EMA, and that's our short-term trend definition here. And then we use the institution's 50-day moving average as sort of that intermediate medium trend right here in mauve or purple. And then the institutions also will use the 100 and more often the 200 as well. So what often happens is institutions, if they own a stock and they see price coming down toward the 50-day, they have rules that say we've got to support that stock. We can't own stocks that are below the 50-day, so they'll step in and do some buying to push that price back up. And similarly, they may have a rule on the 100-day or the 200-day simple moving average, so they follow those rules and try to support their stocks that way. And they also have rules: we can't buy a stock until it's above the 200 or possibly even above the 50-day moving average. So here's our short-term trend. Obviously, it's going to be a little faster with the 13 and 20, and it can be pulling back even as the long-term and medium-term trends are still rising. So it's just an early warning depending on how you trade, but there you see a pullback, and in this case, right down to the 50 moving average, the simple, and then it pulled right back up again. So it's very easy to see, and we recommend in the moving average course that you start your analysis by taking price off of your charts. It's just one click. We can toggle price on and off. Start with it off, and then you can put your price on to look at the candlestick patterns perhaps, or just get a little closer view for entries and exits. But this is a predominant trend to the upside, looking really, really strong. And this is a daily chart. If it's a weekly, we identify it as a weekly, or if it's intraday, we identify it, but otherwise it's a daily chart. And you can see the months here at the very bottom. So here's what the same graph looks like with price. So you can see it's a little bit busier. We've got some pullbacks into the space between the 13 and the 20 EMAs in here and here and here. And after we've had this very nice run up, then it gets a little more risky when we get price falling back into the space between the two moving averages, and it actually did fall below and close below the two short-term moving averages, and then it continued to the downside and crossed below the 50-day moving average before finally sort of finding a base near the 100-day, and then it went back up. So this is very helpful to you. The 100 and 200 show you that the trend is still moving up to the long side. We did cross below the 50, which is a very strong warning, but the long-term trend might just keep us in this stock, and it did reverse rather quickly. Now here's a predominantly downtrend. And again, we have our shorter term moving averages, the 13 and 20 EMAs. They squeeze together and the 13 falls below the 20 right here. And price actually falls below the 50-day moving average. Found support at the 50-day and rallied right back up above the two short-term moving averages and the 50. Does anybody know what this is called? This little pattern right here. I'll give you a hint. There's a pole. There's a pole coming from the high to the 100-day moving average. Does anybody know what that pattern is? Looking at YouTube, they haven't signaled. David says it looks like a flag. Scott says it's a bull flag, but actually, Scott, it's a bear flag, and Alan's got it. It's a bear flag. And the psychology is it pulls back and then rallies up to the resistance area. And people that owned the stock and made a nice profit at the high here, but failed to sell when it crossed below the 50, they say to themselves, the very next time it gets up this high, I'm going to start selling. And so they sell up here and push the stock down even further. Here's another bear flag, right? There's another bear flag. Now what's happening at the bottom? At the bottom, it's the reversion to the mean concept. Price is pulled so far away from the 50-day moving average, which actually rolled over right here and kept going down. And it's below the 200-day and the 100 that it tends to revert back to the mean. So an aggressive investor or trader might start stepping into positions here, especially after a strong hammer candle right here, suggesting a move to the upside. And Jerry does a mastery class where he talks about the hammers in conjunction, or not the hammers, but the candlesticks in conjunction with the moving averages. Yeah, Alan says it's a dead cat bounce. Yeah, that's a great way to phrase it. It's that rubber band effect, whatever you want to call it. The further the band is stretched, the further you can expect the snap back to the mean average. All right. Listen, I hope that was helpful to you. That's the kind of information you get in the Mastering Moving Averages class in a lot of detail. And you'll see here, we are launching that course, well, with these webinars today and yesterday. And got a nice note during the course from Bob K. He wrote and said, Stan, you are a very good teacher. I like your style, but most of all, I appreciate the simplicity of your explanations of the strategies. I am more impressed every day by your instruction and the content of this series of strategies and systems. Each one is very good. In certain circumstances, I can see myself using most of them depending on the portfolio I am working with. So Bob might have a swing trading account, sort of that shorter term trading account, but he also would have maybe a retirement account for the longer term trades. And our strategies, what we teach, helps you with both short term and long term. So I'll tell you a bit more about the course in a few minutes, but for now I want to get into the EMA squeeze. It's a very popular strategy. I think these three EMA moving averages are really combinations that I think are ideal for shorter term swing trading. They're not too fast, they're not overly aggressive. They get you in at a really good time when the stock is sort of just beginning a very nice uptrend. So they're not so slow that you wind up missing the easy money, which is usually at the start of an uptrend, not at the end. Okay, so usually it starts, we get you in pretty early using this strategy. Okay, Sherilyn, I'm going to speak up a little bit and try that. And if you lose sound, don't forget, you got to just about log out and log back in. Everyone else hearing me okay? All right. Yep, looking good. Oh, for Sherilyn it went silent, but nope, everybody else is doing good, so I'll speak up. All right, we use the slope of the three moving averages after a squeeze, and we can predict if a stock or if a significant trend change is underway and whether it's likely to continue. So that slope, we teach this a tremendous amount with a lot of examples. The slope is a very important indicator of trend strength. And then a strong upward move after that squeeze increases the probability of a successful trade. We like to see a start right off the bat, not sort of the moving averages kind of meandering along in a sideways fashion. We want a significant move to the upside. We use again for this strategy the 5, 8, 13 EMA moving averages, the exponential moving averages. Are ideal for this kind of a short-term trading strategy. Here are the buy rules set out for you. We have our 5 EMA crossing above the 8 EMA and starting to fan out. And the 8 EMA must be greater than or above the 13 EMA. And again, we look for the fanning out or separating of the bands as they move higher. We want to see price above the 50-day simple moving average. Again, that's an institutional level, sort of that medium-term level where we know the institutions are watching and trying to keep the stocks that they own above that level. And so that's an important level for us. Our relative timing indicator, the VectorVest trend, direction, magnitude of move, momentum indicator is the RT, and we want to see that trending higher over a minimum 3-day period. So in other words, it's higher today than it was 3 days ago. It doesn't have to be going up every day, but it's higher today than it was 3 days ago. And that helps us avoid some false signals. If RT is hitting a lower high when we decide to buy, we are more likely to get a false signal. And finally, for market timing, we want the market to be in an uptrend as well. And our strategy, we use the DEW timing signal. It's not our most conservative strategy. It's kind of right in the middle. If you're more aggressive, you could use the primary wave up and the green light buyer timing signals. But for this strategy and what we teach is the DEW up signal and down signal. And finally, this I think is what makes the strategy so effective. And a lot of you typed in number 2 for the question I had. What's your biggest problem in trading? And that is knowing when to sell. Well, we have a very firm sell rule. It's the line in the sand when the 5 EMA crosses below both the 8 EMA and the 13 EMA. That's your absolute must sell. Protect your portfolio. Don't let one stock have a significant or substantial collapse, and that's going to be very important. Sherilyn, the DEW is the detrended price oscillator, or the DPO, with envelopes and a weighted moving average of 30. It's in our market timing system. Okay, good question. So we're going to give you quite a few sort of warning signs, particularly candlesticks. In Jerry's section, we give you some other rules or warning signs that I can show you, and then you can make your own decisions. But at the very least, this sell rule is just going to protect you from a collapse in your portfolio. So let's have a looking at the rules. Just a couple of mini graphs here. So we've got that 50-day moving average in the purple line going across. Here is our squeeze of the 3 EMAs coming together. price is still below the 50 moving average. And on this big candle now, we start to see a little bit of separation or fanning out of the moving averages, which is what we need to see. And the slope is starting to move up in a nice 45-degree angle. And on this day right here, price crossed above the 50-day moving average. So that is our trigger. We need a trigger, and then we need the follow-through to purchase. So we had a trigger on this day, everything met the rules, and then on this candle, we would have bought at the open, which was higher than the previous day's close. You can see it a little bit better over here, just carrying it over. Price is above the 50-day. Our three moving averages have fanned out and spread out. And RT on this one, we can see is higher on this day than it was 3 days ago, right here. So everything is in line, and we can go ahead and make our purchase. Okay? And then our sell rules, I'll just kind of go through these. There's some warning signs that we teach in the course. For example, here we have price hitting higher highs up at the top here, but RT is hitting a lower high. That divergence is a bearish divergence, and it's an early warning. If we've got a very nice profit, we might sell a few shares or sell half, or we just let it ride. But it's a warning. When we see the 5 EMA in green here at the top pulling away too far from the 13 EMA, creating a larger gap, that can be a warning, and especially if the 5 EMA has really pulled away from the 50 simple moving average down here. That is a possibility of a reversion back to the mean average, so it's another warning. Another warning, when the 5 and the 8 EMAs are squeezing together, you could decide, well, I'm going to take some profit, or even take all my profit at that point. RT is still falling, so that's another continuing warning. But the absolute sell rule, that is the line in the sand, is this 5 EMA crossing below the 8 and 13 EMAs. Everybody got that while I take a sip of water? Okay, looks like we're all good. Okay, everybody sees all of that. Let's look at it on a little larger perspective. Same stock, and there's our squeeze. There we are above the 50-day moving average, our buying opportunity. There's our relative timing rising. We had some good volume spikes back in here, one red volume day, but then we had some good volume spikes right here close to the 50-day moving average, which is that blue line, and then you could wait even for a bigger volume spike here. Price is still rising, the EMAs are rising, and notice they did squeeze together a couple of times here, the 5 and the 8. So if you sold here, you might have cut yourself out of a little bit of profit, because the green EMA, the fastest EMA, did not cross below the 13 until right here. So it crossed below the 13 there, but not before you could have captured, between 45 and 50% profit, depending on just how you put your order entry in. So this is how often, or how it can work quite often. Notice the RT was really starting to trend lower here in this space, and there's our absolute sell signal. Did go up a little bit after that and kind of went flat, which is kind of dead money here, and then it fell back once again. Nevin, these are moving averages that you would just add to your graph in VectorVest. They do require the Pro Trader add-on module. The nice thing is If you take the course, you get Pro Trader to use for 60 days, included with the course, so you can try everything out, make sure it's going to make money for you, and then you can continue with the Pro Trader or not. You actually get access to the software for 60 days, which is a tremendous value, basically almost worth the cost of the course in itself. So you're getting a tremendous value to try everything out if you're new to VectorVest. But that I'll show you in a minute how that setup works on the graphs and the search that we use. All right, so that's one example. Notice we're starting to get a setup over at the right edge as well. Now here's a cannabis or marijuana stock in Canada. Not particularly high volume, but I liked the way the setup looked on this chart as an example. And so here it is again with that squeeze. And I wanted to mention we need the 5 crossing above the 8 EMA and the 8 crossing above the 13. But for the 50-day moving average, we just need price to be above the 50-day. Here it's been above the 50-day for quite some time and actually hugging the 50-day quite nicely back here at the left edge of the chart. And that's a really good setup. And especially then we head into the squeeze. Big candle here, RT meets our criteria now, it's rising. Big volume well above the 50-day moving average. And the bands have pulled apart and starting to fan out. And so this candle would be our trigger, and then the very next day at the open would be our buy. And then once you know it, 2 days later, price starts to go back down, but the 5, the 8, and the 13 are still rising in line, or at least going a little bit sideways in line, and then they start to fan out again. And this would be another buying opportunity. If you missed the early one, you could come in on this big green candle as the trigger and a buying opportunity here. Price rises nicely. And the entire trade overall, if you held it until the close over here, you'd be doing very well. This one actually, where I have the sell, the 5 didn't actually cross below the 13, but this would have been a good area to take some profit. And then we get another squeeze. There was a sell signal here for sure. We get another squeeze, another buying opportunity, and we could ride that up. Notice there's buying opportunities along the way to add shares. A good strategy is to buy a third when you get the first trigger, buy another third when you get a second trigger, and buy a final third when you get the third trigger. Or you could do half and half, works out quite well. But if you buy the entire position at the start, you could start to take some profits along the way. Here's Sleep Number on the US side. It's still a top VST stock, the value, safety, timing. Lovely squeeze back here, just an ideal setup again. RT rising. There's our trigger candle right here, and then our buy candle at the open the next day. A little bit of a pullback or retracement again, and then price just kept going. Notice here we had another squeeze, but we didn't get that sell signal. The 5 stayed above the 13, and we could have added some shares here, and then price really took off here. Yep, Rajesh, I'm going to show you. We do back testing using the graphs. That's what we're doing right now. Could I have made money if I bought on this signal? Could I have made money if I bought on this signal? Could I have made money if I bought on this signal? That's what you ask yourself when you're reviewing your graphs or doing your graph history. It's a tough one to back test because we don't have stops for the moving averages, but we back test using graph history, and that works out really well. So here's another one. A nice trigger candle here. Everything meets the criteria. Volume is not one of the criteria, but it's nice when we get volume up at this 50-day moving average or above. So this was a great entry. Pulled back a little bit, but we didn't have to exit the position here. And then it took off from there, and an 81% gain. That doesn't happen all the time, especially swing trading. This lasted for, 1, 2, 3, 4 months. Typically, we're in the trade for 20 days or less, but this one just happened to just keep going and going. So this is a little busy graph, but a couple of things I want to show you. Not all squeezes are just ideal or as quiet as the ideal squeeze, especially when you have price on the graph. The squeeze doesn't look as quiet, but we did get the squeeze right in here. And then we got our trigger and the buy signal right here, RT rising. It's nice when the VectorVest buy rating up at the top of the graph kind of confirms the potential sustained uptrend. You don't get a buy rating in VectorVest unless the stock is starting to move up and it has decent fundamentals at least. So here we got a nice buy, and then it rode up and we got a 33% gain by this sell signal, and that was the trigger to get out at that time. We keep an eye on it. We get another squeeze in here, or quiet period, and then we get a trigger and a buy, and we got another 26%. Then we get a quiet period. Price starts to rise again, but now I've got the DEW timing signals on the market on the graph, and this triangle to the downside suggests we shouldn't be buying stocks because of the market timing, so we wouldn't be getting in here, and maybe a good thing because then it pulled back. Gord, I short with options, but yeah, when you see the down signal, and I'll show you a graph pretty soon where it's pretty clear. Actually, I showed you Costco, didn't I, earlier on? So that was a pretty strong downtrend, and you could certainly short on a signal like that. So here, Well Health, just a tremendous squeeze here, and this is in the double-digit gains here again, high double digits, and just showing you some other squeeze areas where you could also step in. We look for RT trending higher each time, and it's nice when volume is spiking, telling us there's a lot of institutional buying going on at these buy areas. And I'm going to show you the search here in a minute, because there's three, I would say the hardest and most time-consuming part of swing trading is to find the right stocks with the correct setup and early in the trend. You want to catch them reasonably early after you had the squeeze and then the bands, the moving average bands, moving up and separating. If you wait too long, especially in swing trading, right, you've missed a good part of the move. So this becomes the hardest thing. Now there's three ways VectorVest makes it easier. We have our stock viewer, allows you to rank and sort and analyze the best candidates very quickly and easily. We have our watch list viewer with pre-built premium watch lists for top stocks in top groups. For example, the Well Health stock was in our coronavirus watch list, and we have other ones as well. And then there's our Unisearch, our scanning tool, and it's a powerful search engine that helps us pinpoint the ideal or potential candidates with the right setup. So for now, I'll just show you the Unisearch, and here it is. It's fairly straightforward. And by the way, I'll send out the slides after the presentation, and you will get an email with a copy of the recording as well. But here is that search, and it just follows the rules, right? We use our Pro Trader. That's what this parameter delivers for us. Stock price split adjusted. The operator is the EMA, and the 5 has crossed above the 8, and I look for it in the past 5 days, both averages moving up. And then also the 8 has crossed above the 13, and both moving averages up in the last 5 days. I'm removing ETFs and closed-end funds from the equation here. And then here is our relative timing greater than 3 days ago stock RT. So that's the one that trips up investors sometimes. And so I'm just going to bring us to the search in our VectorVest program. This is what it looks like. We go price, stocks, and again, you'll get the recording, you'll get all of the steps here. Stocks, price volume, and price split adjusted. And that opens up Pro Trader, which is required because we have these mathematical transactions here, I guess, so technical transactions. So here we just come over to EMA. You can see some of the other technical tools that we have or indicators. And then we just make our selections. We just select the 5 crossed in the last 5 days, above, we have above and below, the 8 EMA. I mean, it's so intuitive, right? It's so simple. And we make sure we check, in this case, both averages moving up, and we click OK. And you do the same for the 8 and 13. Now for this one, we use 1 day because that's price, right? A 1-day simple moving average is price, and we want it to be currently above. We don't need it crossing. We just need it to be currently above the 50-day moving average, at least on the day that we're looking at the trade. And we don't check both moving averages up. And then finally, I'll just quickly show you the RT. So RT is stocks capital appreciation. There's our relative timing indicator. Greater than is our operator. And this is what trips up a lot of investors or subscribers if they're new. And what we use is the custom date and value. Custom date and value. Left click on it. It opens up a new menu. And in this menu, this is where we choose 3 days ago. Right here. And then we come back to stocks, capital appreciation, and choose RT. RT has to match the parameter. And then we click OK. We put in our volume. We use 50,000 average volume in Canada. And in the US, we use 100,000. UK, Australia, Europe, you can set the volume that works for your country, but typically it's 50,000. And that's the search. And then you run the search. Here's today. And you're going to get the stocks that meet the criteria. They meet the rules of the trading system. All right, hope that was helpful. Whoops. And it requires, again, the Pro Trader premium add-in. Doesn't require the real-time subscription, actually. It requires Pro Trader. Real-time, if you have real-time, you get the Pro Trader included. All right. So again, we use history to give you confidence. You can look at all the graph setups and look for those moving averages and how they work. So it's a great technique here. If I just go to the stock viewer and look at the top stocks, now these are typically stocks that have been moving up in price, but I can go to the graphs. I like to start with about a 6-month graph, maybe even a 3-month graph. It really shows you where you would have been looking to enter a position. And so if you entered here, and you can put price on now, would you have made money on this position? We went from $41 on this date. You can see it over here at the right. And currently, without having had that sell signal, we're at $56. Doesn't always work out that way, but it did in this case. You might have even gotten a signal here and come in at $40. Then you got the pullback, a squeeze, but you never would have sold here because you didn't, unless you were scared out of the trade. You know, maybe the market conditions changed or something like that. But the 5 did not cross below. You can read the numbers here. It didn't cross below the 13, so you're in the trade the entire time. So let's look for one where maybe we didn't make money. This one you would have made money going from 89 to 142. So here's a squeeze here. So you would have gotten in here at 43, and then you would have gotten out at 43. So basically a break even. So that's how you can do it. And you can even run your date line or your date calendar back. You can come all the way back wherever you like, and then just move it along on the arrows to the right here. Move them along on just one day at a time. David, I haven't tried it on the mobile app, but there's no reason why it shouldn't work on the mobile app. But you can certainly call our support team and just confirm that or give it a try. So then you just look for that opportunity. We're well below the 50-day moving average here. We're looking for a squeeze as we got here. Price coming above the 50, and we didn't get the open the next day was lower than the close, so we're not in the trade yet. Still not in the trade. And on this one, we might have decided this is okay to get in, and so we keep an eye on it. I'm not sure. I got to put on the market condition here, and we are in an uptrend. So now we're starting to break out a little bit. So now we've kind of gone from this opportunity at $17, or maybe this one at $18, and now we're at 20 and change. So we could start taking a little bit of profit here. And then we see a pretty big candle, a bearish harami, and that's a big warning sign. The two moving averages coming together, big warning sign. So we might have decided to sell at the top here at 2190 or so, and we're out with basically was that a little gain? I guess from 17 or 18 to 21. Not too bad. All right, so that's how you check it all out. All right, so let me move on. So there's the buy and sell rules again, just to recap, and the key concept that we've covered today. And again, it's not a brand new course because we did offer this to several hundred people in November. The feedback was just so tremendously positive that we certainly wanted to relaunch it again today. And we have a special webinar bonus, which I believe goes away at the end of today, because Jerry's done a special presentation where I see the price is up again to the early bird. The early bird is $3.95. Today it's $2.95, which is just slightly lower than the elite pricing mode. I think the elite price is $2.97. So you're getting a better price even than the elite faithful subscriber. So that's the price until the end of today, I think. And the way to get there is www.vectorvest.com/moving averages, and you're going to get access to all 10 lessons or training modules at the time of purchase. So it's a nice advantage where you have access to everything right away, including the previous course mastery classes. And then as the new mastery classes are delivered in this launch starting April 21st, those will be added to your VectorVest account as well. So here are some of the lessons that we go through. I'm zipping through them here because I've got them here in a little bit more detail. And we start off by showing you the VectorVest system, giving you that foundation. Even if you're a long-term subscriber, customer with VectorVest, many people said they found this very helpful. Spent a lot of time on the market timing, the safest time to buy, the trending phase of the market, and the riskiest time to be buying positions. Even for swing trading, there's a safer time with the wind at your back. And we go through all of that and the indicators that we have in our VectorVest program. This one is all about understanding moving averages, how the pro traders and institutional managers use them, the key or significant moving averages. And then this one kind of surprised me. It's one I've been using for years, and it's just trading with a single moving average. I can assure you, if you just trade with a single moving average, over time you're going to lose money. And by that I mean if you just buy when price moves above your moving average and sell when price moves below your moving average, over time you're going to get eaten up by commissions and lose money. In the system that we teach, that was really one of our more popular ones, we teach you money management and how to recognize the ideal time to enter the trade. Trading with golden crossovers, the golden cross, the death cross, explained, rules-based approaches to trading those crossovers, moving averages as support and resistance, EMA squeeze in a lot more detail, and the shorting side is covered as well. And then our multiple moving average trading system. This is the guppy. I love this trading system, especially for medium to long-term trading, but you can certainly use it for swing trading as well. And a section on relative timing in much more detail as well. Rajesh, the live coaching sessions from the previous course are available until we get to the new ones for sure. We were so pleased and privileged to have Dr. Barbara Starr, who's been a technician and consultant to VectorVest, writes for Stocks and Commodities magazine on technical analysis. She came in and did her strategy of surfing the reversal waves using a moving average and the Bollinger Bands. Very valuable, straightforward, simple swing trading system. The Midas Touch, the original Midas Touch for momentum swing trades, but also a technique for using it for long-term investing. And finally, our bonus trading system. I love this system, using the high and low price moving averages, moving average bands. Lovely system. And then we do the case studies, and homework is included in all of this. This is what it looks like when you get the course. Sometimes you when you first get your welcome and you maybe are already in VectorVest, it may say there's a charge there, so you need to log out and log back in. And then when you get into the Mastering Moving Averages course, you need to remember to click on the arrows, these drop down arrows, because the videos and the slides are all below the arrow. So here's what is a moving average. You click on the arrow and then you see where the video is and the slides. So just keep an eye on that. So again, regular price after the early bird is $5.95. The early bird is $3.95, but today $2.95. It's US dollars. But here's what you're going to get along with the course material. You do get these 6 live mastery sessions with Jerry and myself. Those begin Wednesday, April 21st, and we have 6 of them every Wednesday after that as well. You get, for current subscribers, you have access for 60 days to the US Premium Real Time, which includes Pro Trader and the Auto Timer Genius. There's no switching on that. I made a mistake earlier today. There's no switching to Canada Real Time. It is the 60 days US, and you'll get intraday for Canada, just 15-minute delayed. And again, that begins on April 3rd, and you've got it for 60 days if you do not already have it. So from April 3rd, 60 days out, you have access to that. And for non-subscribers, you have access to the VectorVest software as well, beginning April 3rd. So you have access to the course right away, but on April 3rd, you'll have access to the software, and you can dig in and take the training lessons to use the software, the tutorials, and so on. So we'll get you up to speed pretty quickly on using the software. All right, and then Australia, UK, and Europe, you do not have intraday or real time, but you'll have real time US, and you'll have end of day for your regular country subscription. And everyone will have access to all 5 countries, North America, Canada, US, plus Australia, and UK, and Europe. And again, the access includes the Pro Trader, so you can do that search. You don't need Pro Trader to set up your graphs. We just set up our graphs using those moving averages. It's a simple way to do it. Let me just graph here. So when we set up a moving average, we see the price. We right-click in the price, add moving average, exponential, start off with a 10, and then just bring it down to the 5. Add the next one, add moving average, exponential, 10, bring it down to the 8, and do the next one for the 13. Then you've got them all, and they're sitting on your graph, okay? This one must have had a big price movement today because it met our criteria. It is above the 50-day moving average. We would want to wait for these moving averages to fan out before we jump in, okay? So it's giving us stock for our watch list. I wouldn't say this is ready to go ahead and buy just yet. All right. So here's our mastery class schedule. When you get the slides, you can put them in your calendar. And just another kind of a nice email that I got from Rob. He's a longtime subscriber and has taken a few courses, but he took this one and said, "Thank you once again for a great presentation on multiple moving averages. Your Mastering Moving Averages course, as always, is well documented and has a wealth of information. I really like the 20 moving average channel search." So that was something that a lot of subscribers found really exciting and interesting. "I think the Mastering Moving Average course should be a fundamental course for new and experienced VectorVest users. It has been very educational, and I look forward to using the setup searches of the program to advance my investing. Thanks again, and a great job." And then there was Warren, and this was kind of Rajesh and everyone when we talked about the graph history, one of the homework assignments, and Warren looked at the graph history for his own account and then what would have happened if he used some of the strategies that we taught. And he said, "After taking the MMA course, I'm now able to better determine entry and exit points. My win-loss ratio following my old plan resulted in 51% wins with very little monetary gains. If I would have used or followed the 20 moving average strategy, I would have had 75% winners and produced my largest portfolio gain. Using the EMA squeeze, I would have netted me 84% winners with the second largest portfolio gain. And then the golden crossover strategy would have resulted in 64% winning trades and the smallest of the three for portfolio gains. But he says, I would have gladly taken half of the portfolio gains in any of the three strategies." Very nice testimonial. So again, if you're interested in this course, I encourage you to, go with it today. You've got a money-back guarantee if it doesn't deliver. I know it will, but if it doesn't, and if you do the lessons and do the homework, you're going to make money with these strategies. It's www.vectorvest.com/MA. And you can also call 1-888-658-7638, and we have our international numbers there. My email, stan.heller@vectorvest.ca. And we also have Jerry D at VectorVest.com. Any technical issues can go to Jerry. Any course issues or situations, I can certainly help you with that. And I'd love to hear from our subscribers about their successes as well as any issues or problems that they have. So just looking at the question, David says, when the 5-day drops below the 13-day, is that when the stock turns from hold to a sell? No, our buy, sell, hold ratings, David, are completely separate from this strategy. There may be a sell rating, and you may say if it gets a sell before the 5 crosses below the 13, I'm going to sell. but they are different. They have different rules. Okay. Gary says, thank you. Looking forward to the slide deck and the recording. Skip, I'm not sure what might have happened there, but my suggestion, if you're having trouble getting an answer, call the help desk or support product support people, 1-888-658-7638. It's a faster way to get an immediate response. And the nice part is they can help you while you're at your computer. Okay. Rajesh says, thank you, Stan. This is definitely very important for our success. And Mark is asking if you'll get the recording, and you will. I'm going to send out the slides, and I may wait until I get the recording, and then I can send out the slides and the recording. I'm a little concerned because I think the office might be closing a little bit early today because of the long weekend, and then you'll have a bit of trouble getting the recording, so I might just get it out. By the way, anybody on YouTube, if you would like to get a copy of the slides, the recording is on YouTube, by the way, the VectorVest YouTube channel. You can get the recording right away. But you can also get the slides if you're on YouTube. You just need to send me an email, stan.heller@vectorvest.ca, and I'll make sure I get you those slides. Otherwise, I have no way of knowing your recording or your email. John, thank you for that on YouTube. He says, great stuff as always. Thank you so much. And Marie, I just showed you the search. It's not in your VectorVest system. You need to create it. And I'm actually just finishing up the several short videos on every search that we show you in the system, because we want you to create them yourself. It's a tremendous learning experience, and I give you the step-by-step guide in the videos. We show them in the slides, but sometimes it just kind of helps to have someone walk you through it. Most of them are pretty straightforward, but I do set you up with that. I'm just going to take a second and type in that link. Maybe while I'm doing that, if you've decided you want to give this course a try, just let me know. You can say I'm in, or I will be in. I'd love to hear from you if this is something that we can look forward to seeing you on the course going forward. I'm just typing in the link for the sign up. You can just go there and get right involved. I haven't done that on the YouTube, but it's vectorvest.com/MA, and I'll take a minute and just type it in over there. Whoop. Okay, not sure I can do it over there. Okay, wasn't able to type it in. Sorry about that. But listen, I hope you enjoyed the session today. So Marie, which search? Again, I showed you that in the slides. And this is a search that delivers on all the rules. I would say, from my own experience, I've been using this for well over a year. My own experience is, where did I show that search? There it is. My own experience is you still want to cherry pick from here. This will give you great stock. Some of them you can go ahead and buy the very next day. Some of them you want to wait for the setup to really take place. And of course you need that follow through the next day, but that's the search. Thank you, Rajesh. Rajesh signing up. Sherilyn, thank you so much. Says, yay for the explanations. Looking forward to it. That's awesome. David says, can we use this system with any stock or only the great stocks? Well, you know, a great stock is one that's rising in price and has some decent fundamentals. Those are the ones that come up with fairly good value, safety, timing scores. We've got watch lists, for example. Let me just take you here. In Canada, if I go to the watch list viewer, We've got some terrific watch lists that you can pull stocks from. For example, special watch lists, our master retirement watch list, typically a list, it's updated every Monday night, but typically 20 to 35 stocks that have come from 8 of our very best searches for prudent retirement and conservative investors. So you can use that as a filter with your search. So you can add a watch list filter to your search criteria as well. Here's some other strong watch lists, but then in the TSX folder, you'll notice we have the TSX 60 stocks, which is our kind of like the Dow Jones industrial stocks. 60 of our best fundamentally stocks with good market caps. And then we have the TSX 30, we have small caps, we have the Venture 50, a lot of marijuana and gold stocks in there, not necessarily high priced, but they are a benchmark. And then we have our composite index stocks. So when you hear that the TSX was up 50 points today, they're really talking about these 219 stocks. So this is the closest thing we have to the S&P 500. And on the US, you have the S&P 500, the 100, you have the NASDAQ 100, and you've got the stock viewer, which has all 8,000 stocks that we have on the US market. Yep, David, you can add multiple watch lists to your search as well. For example, I'll go to the US side here. So, for example, you go stocks, filter by, watch list equals, and then one that I use quite a bit, I'll just add the Dow Jones Industrials, come down a little further, there's my S&P. I like the S&P 100 rather than the 500, although it's there. And then finally, I'll come to special watch lists and I'll add the NASDAQ 100. So that gives me 3 watch lists that if the criteria is met for any of the stocks in these 3 watch lists and none other, then it'll show up in the search when I run it. So you'll notice it lowers the number of stocks pretty significantly, but Coca-Cola, AT&T, Lilly, Medtronic, Google, these are pretty good stocks. All right, so hopefully that's helpful. Thank you, Kuldip. Really appreciate it. And listen, I think we're just about out of questions. I want to thank you for those of you that have signed up for the course. Jerry and I really look forward to working with you. Just remember, I don't know when this price is going to go away, this $295 USD. So, there is a money back guarantee, but I know you're going to love the course. So if you want to learn more, just jump in and join us. You've got the weekend to get a good start on the videos, but don't give up your family time to do it. It is Good Friday coming up and Easter weekend, so I really hope you enjoy it and have a wonderful time over the weekend. Thank you so much. Thank you for that. Best wishes on a great long weekend, Rajesh says. So, and I wish everyone the same. So look for the slides, look for the recording. I do send the slides as a blind copy, as a large group. So sometimes it may wind up in your junk email or spam. So you kind of got to look around, but you should have that later this evening. I'll just wait for the recording to upload and make sure it's okay before I send it out. And David says, it's impossible to say no to this. You're going to learn a lot, David. Really glad to have you on board. Thank you, everyone. Have a great rest of your evening and have a wonderful Easter weekend.